Alright, what is going on, y'all? Today I want to go over a quick trade that I took this week, and this is like as basic as it gets. Very, very simple when it comes to trading IFVGs, right? Now, if you guys don't know, if you've been sleeping under a rock, this past week, the market just rocketed up, and it was just straight bullish. If you try to take sells, if you entered any sells, you guys know, you probably got clapped. You probably did not hit TPs unless you're like super scalping. Other than that, there was really no continued shorts for any long period of time. Even if you're just trying to trade intraday, it was bullish all week. So, what was I looking for? Obviously, I'm looking for buys, but you have to look for a place to get in. You can't just get in on every single break of a fair value gap that you think, okay, this is turning inverse, let me just blindly buy, right? So when you want to look? You want to look for some kind of liquidity sweep, and then you want to look for a good IFVG setup, maybe on the 1 minute or 5 minute time frame, and then boom, you're looking for your entry. And then I was just simply aiming for a 1 to 2 risk to reward ratio. So let's say I'm risking 1,000, I wanted to get 2,000. Now it's not what I risked. I think I risked 500 and got 1,000 out of this trade on my Lucid eval. Now, let's go ahead and move forward with this trade. As you see, price is just rocketing up, bullish. This is on the 1 minute time frame, so, you know, there's a lot of candles here. But anyways, we can continue to move forward. Boom. We start going down. We start moving down, right? Creating some bearish fair value gaps. And we even just took a little bit of liquidity right here from this low. Now, pay attention to what happens next. We created a fair value gap, so we have 2 fair value gaps. Now, what do I wait for? I don't just get in as soon as this first one breaks, because it could be a false. It could just be tapping into this higher one and then moving lower, right? So what do? I wait for this second one to break. Once the second one breaks, and as you'll see, you have to be patient here. If I would have got in here, I could have gotten clapped immediately, but no. The second fair value gap ended up going inverse, turning IFVG, and then that was my entry. The higher one should always be your entry, because if you do enter the lower one, it might just tap in and then continue with shorts, even though that was very low likely compared to, you know, how the rest of the week's been going, just straight bullish. You never know, though. This was also during Asia session, so sometimes you got to be careful. And then after that, it started creating some bullish fair value gaps, which is good. Always good to see if you're in trades. If you're in a buy, it's always good to see bullish fair value gaps. If you're in a sell, it's always good to see bearish fair value gaps, because that's just giving more resistance for your trade to go against you, right? So as you can see, we came back and tapped into that fair value gap and launched out of it, which is a good sign. If this would have broken, I could have even gotten stopped early and just gotten out of the trade with way less risk than I originally put on, because if you're breaking fair value gaps to the opposite way, it probably means your trade is not going to work out. But nonetheless, we keep on going, and boom, the rest is history. So it went right in profit, and then a little bit of drawdown back into that fair value gap, retested, and then boom, straight to TP, about a 1 to 2 risk to reward ratio for like 35-ish points on a Asia session trade earlier this week, and this was on Wednesday. Super simple, but like I said, there's still key aspects that you need to look for. You're not going into that first fair value gap. You're not going in on just a random fair value gaps. Every single time it breaks inverse, you trade, you blindly buy or blindly sell. You're going to lose a lot of trades that way, and that's what I think a lot of people that are trying to trade fair value gaps or IFVGs, that is why they're losing, and they're taking way too many trades. Because if you look at every single fair value gap, I mean, look at all these fair value gaps right here, but they're way less probability because they're already higher in this move, right? You want to look for that first one, those first ones to happen after liquidity is taken. So we have the dip, liquidity is taken, boom, and we move up, breaking that second fair value gap, and then we ended up flying to TP. Now, is this going to work out every single time? No, but you have to adapt to current market conditions. What have been the current market conditions? Straight bullish, flying, right? So that was my simple trade for the week. I ended up 1,000 for the week, I believe, after all said and done. I took a couple more trades that ended up around break even total, like another win and another loss, or another couple wins, another loss. So ended up around 1,000 up for the week, so I'm okay with that. I'm taking this challenge or eval slow, so is what it is. Up 1K ish, or maybe 1200 by now, and then I need what 3K to pass that eval. So hopefully we'll get that done this week and be on to funded account, which will be awesome. But that's all I got for you. Let me know down below if you enjoyed this, if you got anything good out of it. I hope you guys are trading safe out there. Be careful in these market conditions. They are pretty volatile with all the news going on right now. So thank you guys for watching. Appreciate y'all, and I'll see you on the next one. Trade safe out there. Peace.